Let's look at another question. The balance sheet of A, B, and C sharing profits and losses in the ratio of 3:2:1 as on 31st of December 2014 was as follows. We have the liabilities and you have your asset side. Now on the liabilities, capital accounts A, B, and C 16,000, 12,000, 10,000 respectively. Current accounts again A, B, and C 4,000, 3,000, and 1,000 respectively. And you have a reserve in the liabilities 18,000, and then there is a profit and loss account. The opening balance is 6,000, and profit for the year came to rupees 14,000. So the total profit and loss available is rupees 20,000. And we have creditors worth rupees 30,000. And on the asset side, fixed assets rupees 40,000. Joint life policy rupees 6,000, and you have current assets worth rupees 68,000. Additionally, it was given that B died on 31st of March 2016. His account has to be settled and paid. So for the year 2016, a proportionate profits of 2015 are to be taken into consideration. And for the year 2015, a bad debt of rupees 2,000 has to be adjusted. And goodwill has to be calculated at 3 times of the 4 years average profits. And a policy is taken out on joint life of partners for rupees 35,000, and the premium of rupees 2,000 has to be paid on February 1st every year. And then the profits for 2013 is rupees 16,000. For 2012 it comes to rupees 20,000, and for 2011 it comes to rupees 12,000. And goodwill account need not be kept in the accounts. So we have to calculate the amount payable to B's heirs. So show the necessary ledger accounts of all the partners and other detailed calculations. So let's go through the questions once again. The general accounts that we prepare are your revaluation accounts. So check if we need to prepare a revaluation account. So a close consideration shows that revaluation account is not required. And then what do you prepare? Generally, we prepare also a capital account. And yes, okay, we need to prepare capital account, but there's additionally in the balance sheet, we have capital and current accounts. And it's not mentioned in this question that we have to consolidate the current account and the capital account together. Since it's not mentioned, it means that we still have to prepare a current account. So we have to prepare a current account. We also have to prepare a capital account. And additionally, because we're paying some amount to the heir of the deceased partner, right? We're paying some amount to the heir of the deceased partner, so we have to calculate that also. The amount payable to B's heirs. So, executor of your partner, of the deceased partner. So, we have to prepare 3 accounts: current account, capital account, and B's executor's account. Okay, so let's start with any kind of working note that we need in order to determine the calculation for the current account and the capital account as well. So I'm just going to start preparing my accounts, the ledger accounts that I need, current account, and I've also opened the capital account for partners as well as B's executor's account. Firstly, let's move with current account, because in current account is where all the changes are going to be made, right? Remember, in case of fixed capital account, right, you have a current account and a capital account, and in the current account is where all of the changes are going to be made. So in case of the current account, firstly, let us record the opening balances. So the opening balances are on the liability side, all of them on the liability side for all 3 partners. So let's record that by balance brought down and the amounts for balances for all of your partners. Okay, so record first the balance by balance brought down, or your opening balance. For A, it is rupees 4,000. For B, it is rupees 3,000. And C, the amount is rupees 1,000. Okay, and then additionally, any amount, any changes and all that should be there. Generally, we have revaluation account, and then any interim profits or losses, okay, all of those also should be recorded. So in your original balance sheet, you have an amount of reserve worth rupees 18,000. That amount of reserve also should be subdivided amongst your partners. So reserve 18,000 divided in the ratio 3:2:1. Okay, sharing amongst all of your 3 partners. So by reserve account. So by reserve account, rupees 18,000 in the ratio 3:2:1 gives us rupees 9,000, and then rupees 6,000 and rupees 3,000 also respectively. And additionally, there is an amount for profit and loss, right? In the profit and loss account, there is an amount in the original balance sheet. So with regards to the profit is given profit and loss account opening balance 6,000 and profit for the year is 14,000, and together the profit comes to rupees 20,000. So this 20,000 is what should be divided amongst the partners. However, before we do that, in the question has been given for the year 2015 a bad debt of rupees 2,000 has to be adjusted. Okay, there is an amount worth rupees 2,000 which should be adjusted, and since there are no bad debts in the question, no provision for bad debts also, we'll just adjust it from the profits. Okay, we'll just pay off the bad debts from our profits. Therefore, next you write by profit and loss account. Total profit is rupees 20,000, but we are adjusting an amount of bad debts worth rupees 2,000. So total profits now comes to rupees 18,000, and 18,000 when it is divided in the ratio 3:2:1, just like for reserve, we are getting rupees 9,000, 6,000 and 3,000 for partners A, B and C respectively. Okay, so these are the amounts. Now there are no further undistributed profits or losses under the old balance sheet. So what we have to do next is, of course, to go to the additional information. So in the additional information, they've given goodwill, right? There's an amount with regards to goodwill. Goodwill has to be calculated at 3 times of the 4 years average profit. So let us go to the calculation of the goodwill. I have already opened a working note here. Working note, calculation of goodwill. So start the calculation of goodwill. It's very easy. It's already been given that goodwill is to be calculated at 3 times of the 4 years average profit. So profit you have to take for 11, 12, 13 and also for the year 2014. Okay, so let's do this. Calculate first the adjusted profits, and then after that calculate the amount of goodwill as well. So firstly, calculation of goodwill. Firstly, calculation of average profit. So average profits is equal to, this is for 4 years, right? For 4 years. So you've been given for the year 2011, which is rupees 12,000, and then for the year 2012, which is rupees 20,000, and for the year 2013, which is rupees 16,000. And then for the year 2014, we have been given a balance sheet for the year 2015, right? Balance sheet is for the year 2015. And here, profit for the year is rupees 14,000. So that will also be included in the calculation of our average profits of the last 4 years. So plus 14,000. Now, one thing you remembered when we were calculating the previous situation, when we were calculating the profit and loss account, right? We were distributing the profit and loss account. Remember, we talked about a bad debt, which should be written off. So that amount also should be included, minus rupees 2,000, and the whole thing divided by 4. This will give me my average profit. Okay, so this amount is equal to 60,000 divided by 4 is going to be equal to rupees 15,000. Yeah. And now the saying goodwill is on 3 years basis. So therefore, goodwill is equal to rupees 15,000 into 3 years of purchases equal to rupees 45,000. Okay, this is the goodwill that we have calculated. And then with regards to goodwill, now we have to calculate what is B's share of goodwill and how they are going to be distributed amongst your partners. Okay, generally remember the journal entries with regards to goodwill, right? The continuing partners and also the deceased partner, how we are adjusting the goodwill. Therefore, the next step would be to determine the share of your deceased partner. So write down deceased partner is B. So B's share of goodwill, B's share of goodwill is going to be equal to the total goodwill of the firm multiplied with B's share of profit. Of course, this is very easy, right? B's share of the profit in the firm. So this will be total goodwill is equal to rupees 5,000, and B's share in the firm 3:2:1. So 2/6. This comes to rupees 15,000. And in the question, it was given clearly that goodwill account should not be kept in the books of accounts. Okay, we don't have to carry forward the amount of goodwill. Therefore, we have to write it off. So the regular journal entry is your continuing partner's account debited to your deceased partner. So now we have to determine what is the amount in which the partners are going to be sharing the particular profits, or in which they're going to be sharing this B's share of goodwill. So B's share of goodwill, we have to distribute amongst the partners in the gaining ratio. So you can calculate the gaining ratio, and it should come up to the ratio of 3:1. So therefore, we have to write off the goodwill. So writing off B's goodwill. How will you write off B's goodwill? A will be equal to, out of 15,000, he has gained 3/4 of this. So this will be equal to rupees 11,250. And then for C, out of rupees 15,000, he has gained 1/4. So it will be equal to rupees 3,750. Okay, so this is how it's going to be adjusted, because we don't have to keep the goodwill account in the new balance sheet. So this is how the goodwill will be adjusted using the current accounts of the partners, as according to the question. Okay, so now we have to record these adjustments in the current accounts of our partners. Remember, we're recording in the current account, not in the capital account. So in the current account of your partners, let us write the journal entries. So on my debit side, I'm going to record to B's current account. This is the adjustment for goodwill. And then let's record the amount distributed to A will be 11,250. And for C, it is rupees 3,750. And the double entry by A's current account and also by C's current account. Okay, so these amounts, we already know them, 11,250 and 3,750 respectively, the amounts. And after that, what else do we have to do? We have to calculate the interim profits also, right? Because B died in the middle of the year. Generally, they close on 31st of December, but he died as on 31st of March. So this next thing that we have to do is also calculate the profits, that is the interim profit due to your deceased partner. So next, again, open another working note, start another working note for this particular calculation. Okay, working note. Let us calculate the interim profits, or the profits from the period of the opening of the books of accounts until the death of the partner. So B died as on 31st of March 2016. Now, what is the profit that is earned during that period? Okay, during the year 2016. Now, in the additional information is given to you there. For the year 2016, proportionate profits of 2015 are to be taken into consideration. We have to consider the profits that are earned in the previous year. And the profit for the year 2015, go to your original balance sheet. With regards to profits, they've given you profit and loss account, opening balance 6,000. So opening balance is the profit of the previous year, which is 2014. And profit for the year 2015, clearly given, rupees 15,000. So you have to take this rupees 14,000 into consideration. Okay, in the question, once again, for the year 2016, proportionate profits of 2015 are to be taken into consideration. Okay, so let's write it. Profit of the year 2015 is equal to rupees 14,000. However, it's given here. Yeah, for 2015, a bad debt of rupees 2000 has to be adjusted. So minus rupees 2000. Got it? So basically this rupees 14,000 is your profit, and this rupees 2000 is the bad debt. Okay, I hope it's not confusing. So 14,000 minus 2,000, the total profit for the year 2015 is equal to rupees 12,000. So now you can calculate, therefore, interim profit is going to be equal to, interim profit is for January, February and March. Died on 31st of March. So January, February and March, 3 months. Okay, interim profit will be 12,000 multiplied with 3 divided by 12. So profit for 3 months is equal to rupees 3,000. Now out of this rupees 3,000, what is B's share? And B's share of interim profit is equal to rupees 3,000 multiplied with the profit sharing ratio, 3:2:1, right? So 2 by 6 is equal to rupees 1,000. That is our interim profit for the period of the year 2016 when partner B died. Now, as we know, when it comes to interim profit, because it's not the final profit, we cannot write it in the balance sheet as interim profit, right? We cannot record it as your final balance itself. So we are transferring it first to another account known as our profit and loss suspense account, right? So transfer it to your profit and loss suspense account by profit and loss suspense account. This is the amount of profit that you have calculated. Again, you can write it, if you are numbering your working notes, you can write it as working note. This is basically my second working note. So working note number 2 for the profit and loss suspense account. And with that, under B's column, rupees 1,000 only. Okay. Now, there are no further changes, I believe, with regards to the partners' accounts. There is an amount with regards to joint life policy, right? A policy is taken on joint life of partners for rupees 35,000 and a premium of rupees 2,000 has to be paid on February. So joint life policy also, that amount has to be adjusted amongst your partners because it's a joint life policy. It relates to all of your partners. Therefore, it should be distributed also amongst all of your partners. So with regards to joint life policy, you don't exactly have to open a working note. You can just write a small note at the end of your calculation. Okay, so just look at the adjustment. A policy is taken out on joint life of partners for rupees 35,000. So the maturity value, okay, maturity value is equal to rupees 35,000. Okay, the total value, it is not maturity value. It is the total value of your joint life policy. It is rupees 35,000. But premium is to be paid on the 1st of February every year. So as of the period 31st of March 2016, it's already crossed February. So a total amount of rupees premium. Okay, let's write it as premium. The amount of rupees 2,000 as premium should now be deducted. So the total maturity value as on the date of death of a partner is rupees 33,000. Okay, as on the date of the death of the partner is rupees 33,000. However, in the balance sheet, there is a joint life policy worth rupees 6,000. So this should be deducted. So minus the joint life policy in balance sheet. So amount of rupees 6,000 has to also be deducted, and you're finally left with an amount of rupees 27,000. So this is the amount that should be transferred to partner's current account in the majority of your joint life policy. Okay, so once again, the total value of the joint life policy given in the additional information, the value is rupees 35,000. All right, and a premium is paid every year on the 1st of February, and we're preparing these ledger accounts as on 31st of March. That means February has already crossed, right? Therefore, we have to deduct the amount of premium paid, and this gives us a maturity value as on that date, rupees 33,000. But there is already a joint life policy appearing in the balance sheet at the value of rupees 6,000, and this also should be deducted, okay, because this has already been paid to your partner. So rupees 6,000 is deducted, and finally the total value of our joint life policy as on the date of the death of the partner B is rupees 27,000. Okay, so now let's come back to the current account of our partners and record this particular entry with regards to joint life policy. So this entry will be by joint life policy. If you've prepared it as a working note, then you can write the working note and the title. If you're just writing a small note after that, then you can just put a mark for yourself, just for your understanding itself. It's not for anybody else. Okay, so by JLP, the total amount is rupees 27,000, and 27,000 divided in the ratio 3:2:1. So for each of your partners, partner A will be 13,500. In case of partner B, the amount is rupees 9,000, and in case of partner C, the amount comes to rupees 4,500. Okay, so I believe I've recorded everything. Now, what we have to do is we have to close the current account, transfer the balances of the current account to the next period, and in case of the deceased partner, we have to close this account. We have to close the current account, and then in order to, after that, we have to close also the capital account. Okay, so let's close these accounts for your partners and calculate the total, how much we are supposed to be getting. So partner A total should come to rupees 35,500. I believe. Just do the calculations also properly. Should be 35,500. Partner B is rupees 40,000. And partner C, rupees 11,500. Okay, once again, for partner A, 35,500, partner B, 40,000, and partner C, rupees 11,500. Now, whatever balances you're having, let's transfer the balances to your continuing partners to closing balance, right? So to balance, carried down. In case of partner A, it is rupees 24,250. Partner B has died. We'll just, total balance is rupees 40,000. We have to open a new account. And partner C is 7,750 balance. So when it comes to partner B, because we cannot close because there is still some balance of capital we have to distribute. So let's transfer this to B's capital account. Okay, open up B's capital account and we'll record the balances for your partner B and also determine how much he has to pay to, how much the executor is supposed to be receiving. So open the capital account of your partners and go to the original balance sheet and look out for the opening balances. So by balance brought down, partner A is rupees 16,000, partner B rupees 12,000, and partner C rupees 10,000. And after that, you also have B's current accounts. Let's record that also by B's current account. The amount that was transferred from the current account, this amount here, rupees 40,000. So under B's column, rupees 40,000, right? And there's nothing else because all of the adjustments are generally in the current account. So there are no adjustments in the capital account. So we can close this capital account also just like this itself. And capital account, 16,000 for A, 52,000 for partner B, And for partner C, it is rupees 10,000 itself, no changes for partner A and C. And then to balance carried down, for the balances, the closing balances of partner A and C, rupees 16,000 and 10,000 respectively. Okay, and then when it comes to the deceased partner, his account is to be closed. There will be no closing balances for him. There will be no carrying forward of the balances for him. Rather, his account will be transferred to his executor. So to B's executor's account. To B's executor's account amount, total amount, rupees 52,000 is transferred to our deceased partner. And next, let us prepare the deceased partner's executor's account. So, by B's capital account. This is the opening balance for B's executor by a transfer from B's capital account. Now, since they have not mentioned about payment of interest to the heir of your deceased partner, therefore, we're just going to close this account as is like this. There is no payment, as you've already seen, right, when we calculated interest on the capital. Now, there is no such information on this. Therefore, I'll just close the executor's account and assume that the executor will be paid subsequently. So, by a to balance carried down, rupees 52,000. And with that, we have closed also the executor's account. So, under this question, we've prepared the current accounts of the partners and also the capital account for your partners. And we closed down the deceased partner's capital account by transferring it to the executor's account. Okay. And with that, we've basically covered most of the topics under the death of a partner. So we have talked under Unit 5 about retirement of a partner. We've learned about change in the profit sharing ratio, and we've also talked about death of a partner. And in the next session, we'll be coming to the next subtopic, which is with regards to dissolution of a partnership firm. And under the dissolution of a firm, we're going to be talking about a very important topic, which is the piecemeal distribution and eventually also the sale of a firm. Okay, so you can just start learning about what this piecemeal distribution, just get a brief idea of what piecemeal distribution is and how it works, and subsequently when we're dealing, we'll be solving quite a number of problems. You'll be able to understand it in depth.